Hey guys, welcome back to another video. In this video, I'm going to be talking about the third quarter earnings results that came out for ConocoPhillips. As you can see, this stock is up 70% over the last year, in the same year that the S&P 500 is down a little over 10%. So this stock is obviously very much so dominating the market right now. So we're just going to look into the underlying financial health for the company and then figure out the intrinsic value per share for ConocoPhillips to know if this is a good buying opportunity to buy into the stock from a value investing perspective. So leave a like on this video, really helps this channel grow a lot, and let's get right into it. So we can see right here from this article that ConocoPhillips is basically talking about this article is talking about how ConocoPhillips reported big profits, and they're also planning an $8 billion project that's going to take place sometime next year, as we can see right here, and that's obviously going to improve or increase their profits a lot. But on top of that, this article talks about how the president, Joe Biden, has obviously been very critical of a lot of the oil companies that have been experiencing profits during this past year, during this time period, even going as far as to say that some of these companies are war profiting as a result of the Russia-Ukraine war, which has obviously disrupted the global oil supply and ended up distorting oil prices, which has led to these increased profits for these oil companies. So it'll be interesting to see how these up-and-coming events affect ConocoPhillips. Obviously, the $8 billion project is going to positively affect their revenues, but if the Biden administration, Congress, and a couple of other events that have to do with Russia and Ukraine take place in the future, that might negatively affect the price for oil barrels, and then obviously that'll negatively affect ConocoPhillips' stock moving forward. And so right here we have their income statement for the third quarter of 2022 compared to 2021. We can see year over year, their revenues have improved from about $11.6 billion to $21.6 billion. So that's obviously a massive increase, almost 100% increase in revenue year over year. We can also see that their net income has increased from about $2.4 billion to about $4.4 billion, or around $4.5 billion. So that's also another almost close to 100% increase in their bottom line net income here. So they've definitely been reporting huge profits in the third quarter of 2022, which is partly the reason why their stock price has increased so much over that time period. And then we can see right here on page 5, or actually this is their comprehensive income statement. I'm going to go to page 6, their balance sheet. We can see they're comparing September 30th, 2022 to December 31st, 2021. During that time period, the total assets have increased by about $4 billion. And on top of that, we can see their total equity is up quite a bit by about $4 billion, and their retained earnings is actually up $11 billion. So the fact that their total equity has increased less than the retained earnings, we can see the reason for that is mainly because of this increase in their treasury stock account, which basically goes up when a company is repurchasing shares of their company and reducing the amount of shares outstanding in their company, which in the long term ends up increasing the share price for the company's stock even more. And lastly, right here, we see their cash flow statement for the first 9 months of 2022 compared to 2021. During that time period, their operating cash flow has increased from $11 billion to about $21 billion. And then we can also see in their financing activities that they have been returning a ton of value back to their shareholders. They returned about $3.3 billion worth of dividends in the first 3 quarters, and then they also repurchased about $6.5 billion worth of common stock. So that's pretty much like $10 billion worth of value returned to their shareholders. So that's like half of their operating cash flow that's been just returned to shareholders through dividends and share repurchases. So definitely a good sign for shareholders who've experienced this 70% return over the last year. And so now we can see this discounted cash flow model to figure out the intrinsic value per share for ConocoPhillips. Yahoo Finance is estimating that this stock is going to grow at 27% for the next 5 years compounded annually. I was conservative and made that 13% for the next 5 years after that. They have a free cash flow of about $11.67 billion in 2021, about $6 billion of debt, and about 1.25 billion shares outstanding. And so with that, their intrinsic value per share comes out to be about $306 per share, with a 50% margin of safety of 153, which means that ConocoPhillips is currently trading below a 50% margin of safety right now, somewhere between a 50% to a 60% margin of safety relative to their intrinsic value per share, which definitely puts them at a pretty big buying opportunity if they're able to maintain this growth rate of 27% year over year for the next 5 years, which is obviously a pretty big question mark right now, considering all of the catalysts and the upcoming events that could positively or negatively impact a lot of these oil companies that have been growing so much over the last year. We can also see from this competitor analysis on the right side here that ConocoPhillips is pretty much second in the industry, right behind Devon Energy in terms of operating efficiency across all of their different financial ratios here: gross profit, net profit, and return on assets. They have the second best gross profit and net profit margins behind Devon Energy, and they have the second best return on assets at about 10%, which is close to about half of Devon Energy. So from a competitor analysis standpoint, it looks like Devon Energy would probably be the buy, with ConocoPhillips coming in a strong second. And then from an intrinsic value standpoint, they're obviously trading way below their intrinsic value per share at around a 50 to 60% margin of safety. So obviously from a value investing perspective, that would put ConocoPhillips at a pretty strong buying opportunity in the event that they were actually able to maintain this growth into the future. So interested to see where this stock goes from here. Let me know in the comment section down below what you guys think of ConocoPhillips and their massive earnings growth over the last year. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.